All right, so let's try a different type of example. Let's do an example where we can look at the DXY and how it can help us identify bad opportunities and where reversal could happen, and basically just, save ourselves a bad trade, a stop loss. Okay, so for example, here on the right, I have this great movement on the Dow Jones pushing down, right? It's quite decisive, it's quite linear. We're talking about a movement of 1,600 points, which is quite a lot. Okay, and basically, let's say I'm looking for a retracement, maybe 38.2, 23.6%, just like the last example, to continue the movement, to do a short to join on the movement, and basically to extend a bit lower, maybe to here to 30,000 at the extension of minus 61.8. Okay, so if I do my fib like this, maybe I'm looking at the 38.2 once again around this area. Okay, right over here. The 23 could be valid. Okay, however, I don't like that this wick from this candle is as high. Okay, and if I enter at a 23.6, I expose myself to a large stop loss that will be too large. I mean, from here to here is 250 points, so my stop loss would have to be minimum that, and of course that would make the setup invalid for me. The stop loss would be simply too large, so it's not worth it to enter at 23.6. So I'd like to see a 38.2 to enter in the trade. So let's see what happens. I mean, we're keeping this example very simple. The goal of this example is not to show how to execute the trade, but just to verify the correlation with the DXY and see basically how the flow of the USD and the indices could have helped us identify what was going on behind the scenes of this kind of play. Okay, let's say. So market is coming back up. We have a wick all the way here to 31,575 rejection. We close, below the 23.6. We don't quite have our 38.2 yet. A bit of consolidation. We're coming close. Pushing a bit below. Okay. Coming back up. A bit of consolidation again. Bit of consolidation again at this area. So we can see that there's some kind of resistance being created around this let's say 31,600 area. So let's just put a resistance line like this. Maybe we can adjust our fib just like that. Okay, and you can see that by adjusting the fib, we see that we are leaking from the 38.2. We're leaking a little bit, but we're coming back below. We're leaking and we're coming back below. So now at this point, the trade could go both ways. So if we decide to do a short, someone could come up right here in the market and say, okay, I'm going to short here. Wrong side. I'm going to short here. Okay. Basically put their stop loss above. 200 points, it's a bit big, but whatever. Let's say they put it like this. They're looking for an extension all the way here. Okay, still a good risk reward, could be feasible for another trader. Not in my particular trading plan, but for someone else, they could have a stop loss of 250 points, whatever the case may be, and they could be looking for a short in this fashion. Okay, but the important thing in this example is to look at the DXY and see what's the flow of the US dollar currently, okay? Because if I see that the market is leaking from a 38.2, we can, like I said, either have the short like this, or we could have a break to the upside, and it could signify that we're looking to push higher and that maybe we're looking for a reversal, okay? How can we know in advance? By looking at the DXY. So let's look at the DXY. So if we take this area over here, okay, we can see that basically from this bull candle, which is May 21 over here at 4, we can see that basically price is pushing up over here, okay, to retrace to this area. So basically from this week here all the way here, US30 is appreciating, and we see that the DXY is depreciating, okay, in this fashion. So USD is going down, okay. Now if we look a bit before, from the movement of going here to here, US30 is going down, and basically the DXY is going a bit up, but it's mostly just like a consolidation. It's some form of flag. We have like a flag of continuation to the downside. So basically we saw some US selling before. We have this small flag, bullish flag, which could be considered like a consolidation, and then USD pushing down again. So here, if I'm looking to make a short here at my 38.2, I have USD being, sold off. This is obviously a problem, okay? This means something is going on. This means the intentions are not aligned, the correlations are not aligned, okay? Like I said, most of the time, USD is the DXY with the USD is going to drive the main narrative. It's going to have the right answer. And just by looking at the previous price action in the last few weeks, last few days, you can see that overall, we're pushing down, we're having a flag, we're pushing down, we have a flag consolidation, we're pushing down, okay, and now we're actually pushing down. Technically, you wouldn't see the future, okay, but from here to previously over there, okay, you can see the pattern just of DXY going down and down and down. So if DXY is depreciating, my US30, my Dow Jones cannot go lower, okay, because usually, like I said, when USD is being sold off, the money is going to be transferred on the other side. It's going to be transferred in gold, okay, in XAU, and it's going to be transferred in indices. So this is my red flag, my first and main red flag that this trade, of course, is invalid. So you would remove this basically a short setup, and you would know that there is a very high probability, 90% and more, that we are going to break to the upside. So this automatically tells me that this movement going down, this downtrend on the Dow Jones is now over, because the correlation is not happening, and it means that it's just a question of time before this movement extends up and goes back up. So now, on the contrary, now that I know this information, I'm gonna be, I'm gonna prepare myself in advance, and I'm gonna be looking for a long now in this situation, okay? So if we remove the drawings here, let's place back the fib like it was, just like this. So we know there's a high likelihood of price action going back up. So let's prepare in advance and let's start looking for setups to go long. So if we advance the price action, let's see what happens. And then boom, here we have a breakout to the upside, okay? So there's multiple ways to trade it. I mean, if we went to the lower time frames, maybe we would have looked for a long around this area, okay, if you have a bit more experience and you know how to place yourself early. However, if we're just looking for a traditional trade, well, we would have to wait for a small retracement after this impulsion, okay? So in this case, I would do a fib from this week to this week, okay? I would see a 38.2 around here, okay, looks nice. Yeah, rectangle over here. This whole area is the area of interest, okay? And if we can come back here, I'll be able to do my long. If I'm not able to come back here, well, I'll find an entry point at some other level afterwards, okay? So let's see what's going on. We come back to the 23.6, okay, a bit of consolidation here. There you go. Now we get back to our 38.2% retracement fib. Then we can flip it to do our long around this area. Stop loss will be below this level. Let's say 100 points, just like that. And then I have my extensions, minus 27, minus 161.8. Well, just 61.8 in this case, since we're flipping on the other side of the fib. So just like the last example, let me put my take profit here, identify my obstacle, and then I'll take partial profits along the way or just close the trade a bit earlier, okay? So if we look at the obstacles, man, I have difficulty pronouncing this word. So if we look at the obstacles along the way, okay, there you go. Now I said it correctly. Okay, so we have this first one over here. Then we have the second one over there, which is the extension of the fib minus 27. And it's also the retracement 78.6 fib. And then finally, we have the take profit area around here, which is the high, you know, with these wicks over here. Okay. So basically now we have a nice rejection of the 38.2. We entered here, we flipped the trade. We were looking for a short, but the DXY showed us that the market was going to flip in advance. So we knew that information in advance. We waited for this push. If you have a bit more experience, maybe you would have entered at this price, but in any case, it doesn't matter because we entered basically at the same price later on. So after the initial push, we waited for the retracement. We did a new fib, 38.2, good area. Last support, we did not make a lower low. We made a wick, great reaction. Of course, we would have went on the lower time frames, 1 hour, 20 minutes, 15 minutes to have the right precision to enter at this level. And then we identified our obstacle, take profit, stop loss, risk reward is 13. Looks great, looks amazing. Another great trade for the month. And basically, as soon as we reach the first obstacle over here, we're going to put our stop loss to break even. And then we're going to take partial profits or even close the trade a bit earlier if we want. Okay, so let's see what happens. So boom, we reach the first obstacle and we seem to be breaking it. So stop loss break even right away, and let's let the trade run. So a bit of consolidation here, price is coming back. Okay, a bit of consolidation. Okay, just sits on the EMA, 50 EMA 4 hour. Just the price action sits on it, touches the 100 EMA actually here on the 4 hour. Bit of consolidation. Okay, and finally breaks to the upside. Okay, so here maybe if you wanted, you could have taken partial profits on your trade if you wanted to, if you found that the risk was that the market bounced off the EMA, maybe came back to risk on your trade, to basically near your entry price. You could have taken maybe 50% off your trade, 40%, 60%, whatever the case may be. But if you're patient in the trades, a few candles afterwards, we broke to the upside. We even broke this level over here, and all that remains is the high over here, this take profit. You can even close the trade a bit sooner, it doesn't really matter. It's just like you want. So basically we went all the way up, pretty much got stopped out perfectly. Not stopped out, I mean taking out of the trade positively, perfectly. And yeah, it was pretty smooth. And then we have a rejection, natural rejection. Institutions are taking profit at the resistance at this area. Will we go higher, lower? At that point, we would have to look at the DXY, look at the fundamental information, and make another judgment call from there. Okay, but basically the goal of this example was just to show how the DXY was helping us figure out what was going on in this mess over here, and how we flipped our short idea from to the long side. Actually, we found a good entry, we did our classical execution with our confluence area around here, took partial profits along the way if we wanted to. We put our stop loss break even after we broke the resistance over here, the obstacle over there. And basically the trade went smooth afterwards until the take profit for a total of 1,300 points with a stop loss of 100 points. So initial risk reward was 13. Okay, great trade once again. Quality, not quantity. You can do one trade like this, two trades like that per month, and that's going to be plenty enough for you to grow your account once again. Okay, so DXY is very practical, so you have to learn to use it properly.